Hello and welcome to Earnings Echo. We put together the most important information about Rubrik. We are diving straight into a Q4 report that really has the enterprise software space buzzing, looking at how a legacy backup vendor is trying to pivot to being the mission control for enterprise AI. So let us get right to it. Deliver the hard facts for Q4, specifically the top line, the bottom line, and how those results actually compare to guidance.
Right, so the headline numbers are exceptionally strong here. Q4 total revenue hit $377.7 million, which is a 46% increase year over year.
Wow, 46%.
Yeah, and on the profitability side, non-GAAP diluted net income came in at 4 cents per share. Management actually explicitly stated they exceeded all guided metrics for the quarter.
Okay, but what are they projecting looking ahead?
They set Q1 fiscal 2027 revenue guidance between $365 million and $367 million, and they projected full fiscal 2027 subscription ARR, annual recurring revenue, between $1.829 billion and $1.839 billion.
Right. I mean, a 46% jump to almost $378 million in revenue looks frankly a bit too good to be true in this kind of macro environment. So I want to challenge the quality of that revenue.
Sure.
The report mentions material rights. So how much of this beat is just padded by a one-time accounting adjustment? Give me the actual underlying operational growth.
You have to look under the hood.
Yeah.
Exactly $18 million of that Q4 revenue came from those non-recurring material rights.
So that is just a one-time bump from recognizing value in past contracts, not actual new operational cash flow.
Exactly. But here's why the quarter still holds up. Even when you strip out that $18 million, the core revenue still grew by a highly impressive 43%. The real operational driver here is their subscription ARR, which reached $1.46 billion.
Which up 34%.
Yes, up 34%.
The 34% growth isn't just price hikes on existing clients. You need net new adoption to sustain that kind of scale. What does the operational breakdown look like there?
It is net new adoption. That growth was driven by a record $115 million in net new subscription ARR. We are seeing sustained enterprise momentum.
Give me the exact enterprise cohort numbers.
They now have 2,805 customers generating $100,000 or more in ARR. So that enterprise cohort is up 25% year over year. Crucially, their competitive win rates against legacy vendors have now crossed the 90% threshold.
Okay, let us transition to the earnings call tone. If I am understanding this strategic shift correctly, they are basically moving from being the enterprise filing cabinet where you just, store old data for compliance.
Right, to being the active security guard for the AI tools using that data.
Yes, exactly.
That analogy hits it perfectly. I mean, the filing cabinet is a commodity, but the security guard is a premium service. And this shift explains the tone on the call, which was highly confident. CEO Bipul Sinha specifically called it a spectacular Q4.
But what is management signaling about their future product ecosystem?
The critical management statement centered on this exact positioning. Rubrik is moving beyond traditional data security to become what they call the mission control for the AI enterprise.
Mission control sounds great in a press release, but how does that translate to the actual product, specifically regarding this new Rubrik Agent Cloud?
Well, they launched the Rubrik Agent Cloud, or RAC, specifically to secure enterprise AI agent adoption. Here's how that works mechanically.
Right.
As companies let autonomous AI agents loose on their internal data to draft emails, analyze financials, or pull records, the risk of massive data leaks skyrockets.
Because the AI might pull things it shouldn't.
Exactly. So RAC acts as a strict guardrail. It sits right between the AI and the data pool to ensure those AI agents can only access and process information they are strictly authorized to see.
So to summarize the long-term investment story here for you, the listener, Rubrik is leveraging that 90% plus win rate in the backup space as a sort of Trojan horse.
That is the strategy. They get into the enterprise infrastructure as a basic recovery tool, and then they upsell this critical AI data security platform.
Which obviously carries significantly higher margins and stickiness with the customer. Which leaves us with the ultimate question as we watch this play out. As Rubrik scales these AI risk management tools, will enterprise IT budgets view them as an optional operational add-on or an absolute non-negotiable requirement for safe AI deployment? Because if it becomes the latter, that changes the entire valuation model.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information and does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.